You want me to go long on silver? Ladies, get your mind out of the gutter. I'm going long on silver. 20 ounces worth. Let's talk about what this big bank wants us to do as we explore. Yeah, they want us to go long on silver, that's for sure. But there's something else that they're saying in this revised forecast, and I'm going to be reporting to you from investing.com. You never know what's going to happen tomorrow or in the middle of the day. But one thing is for sure, we know that silver will preserve your wealth if you strategically buy it at certain times, and they're trying to help you. At least that's what we think is happening. I don't know. Many people think it's a PSYOP campaign by these big banks. Nonetheless, Summit Metals are there to help you to procure that silver with very good customer service, competitive prices, and fast shipping. So check them out at summitmetals.com. So what's going on here with silver? Well, indeed, it is hanging in there, that's for sure. As I record this video, it is down today, but not by a whole lot. It is still above $38.50. But by the time you see this video, well, the long and short of it is it may be down again. In fact, I think it may be a time of a late summer doldrums for silver. I don't know what more could really affect the price a whole lot other than what I reported on yesterday, and probably some of the biggest silver news I've ever reported. So check that video out. I'll probably link to it at the end screen here if you've not seen it. But this is quite an interesting thing by UBS. Investing.com is reporting here. They have urged investors to maintain long positions in silver and pointed to favorable entry levels after the metal's recent consolidation. Silver prices have recently consolidated around $38 per ounce, but UBS expects the metal to advance towards $42 to $44 an ounce in the coming quarters. That's right. So essentially, it sounds like a half year from now it could get that level, which is fairly close to my target. My target for silver by the end of the year was long before UBS made their predictions. In fact, and it was relatively recent. I think we're going to see 41 by the end of the year. And provided that the Federal Reserve resumes its rate cutting cycle, and I could see that happening. In other words, if we see as what J.P. Morgan has predicted, 3 or 4 rate cuts in the coming next few meetings, well, we're going to have a full point down, and that's going to be good for silver. The bank introduced its third quarter 2026 target with this note: rolling over forecasts and making incremental upward adjustments further out. So its projections for the fourth quarter of 2025 and the first quarter of 2026 remain at $42, while forecasts for the second and third quarters of 2026 have now been raised to $44. Now, here is what I couldn't believe when I saw this and read this, that what they are doing is they're favoring a long position in silver and would add to positions on pullbacks below $36 an ounce, according to strategist Dominique Schneider and Wade Gordon. Now, think about that for a moment. If they are playing a PSYOPs game with us, that means that they're basically telling us that they think silver is going to go to $44 an ounce by the end of 2026. But they're saying that we could see a pullback, a fairly dramatic pullback, and essentially not to add to the positions in the silver market until it drops below $36 an ounce, which I guess is possible. Although at this point in time, I kind of doubt it's going to fall below that level. But obviously, it would be a good time to buy. And I think it'd be a good time to buy anywhere below 38 at this point. In fact, I still think it's a good time to buy. Now, notwithstanding, I'm not telling you to go out and buy silver at any price. You have to decide what's right for you. What I would do is watch the markets and wait for a fairly big pullback. We do see them happen from time to time when the price plunges, and I know some get tired of me hearing this or me telling this, but a plunge is a dramatic move of 2% or more in any given day. And that is usually a psychological reaction to news or what have you, and the price drops and people start to panic. and they start to sell off a little bit. They see it drop. That's a good time to get in. You get in when the market is bleeding. When there's blood in the streets. That's when you get in. Warren Buffett's well-known advice is to be fearful when others are greedy, and greedy when others are fearful. You certainly should take that advice for sure. And UBS is kind of making that advice to some extent, but that is to predict that there's going to see a pullback below $36 an ounce. I just don't know that that's going to happen. The team notes that drivers behind the bullish case are unchanged. Expectations of the Fed gradually shifting rates to neutral, a softer U.S. dollar in the mid to high single-digit range, and eventually stronger economic growth supporting industrial demand should underpin the market. However, the strategists cautioned that near-term growth concerns may limit upside given more than half of silver demand comes from industrial applications. And that number, again, it fluctuates. It's anywhere between just over 50% to just under 60%. Historically, the gold to silver ratio here, fairly high where it is now, could narrow, they're saying, between 75 and 80 if growth accelerates. And so that's what they're saying for silver. It's pretty amazing. And I've never seen a big bank make this kind of advice before to buy at a certain level. And it obviously has me a little bit skeptical, honestly, and wondering what their motivation is. And maybe they're saying not to buy now and just to wait until that big pullback comes. And then the pullback doesn't come, well, then who knows, maybe they will come in and do some buying along with the other big bullion banks. So that's why people feel it's sort of a psyop, a campaign or strategy for investors out there. But in the end, really, no matter what advice you get from anybody, it really boils down to your level of understanding of the markets, number one, and number two, your budget, which is even more profound. But nonetheless, holding and buying silver, whether in ETF form, which is kind of where they are geared, or having the physical, it's somewhat of a different strategy with each of those. I think the ETFs and that kind of move is really something that is much closer to day trading, something you can move in and out fairly quickly with low premiums and a little bit less risk, where you can play the markets in that way. Whereas stacking physical, which I encourage, in fact, that's all I do, I don't really mess with the ETFs, is something you should think about long term, because you've got more skin in the game, because you've got to hold the metal, you've got to pay a premium on the metal, and you're going to get less than spot for most of your silver these days. Most of your stackable silver, the reality of the markets and where they're at right now is you will get less than spot for it. In fact, I don't know of very many places that will pay you spot for it. Some might, but there's just a lot of folks that are selling right now. And I've always tried to, in this time especially, to encourage my viewers to hold on to as much silver as they can. These are the times to hold, to not be fearful. And when you have your silver, when the prices go up and you're thinking, "Oh, I'm going to get out because I've waited so long for the price to get this high," and who knows, it could go higher, or it could drop from here. We never really know what could happen with silver. It could totally just drop from here, and this may be the absolute high of the market for the next 10, 15 years. You never know. And so I think because of that fear, people are like, I'm out of it. But there's so many fundamentals, and there's so much that has happened around the whole world that has changed the fundamentals and the dynamic of the silver market, that I think we're going to still continue to see the price move up and adjust for inflation and then some, much like what is done in 2025. But at the very least, I think we're going to see silver still perform very well and at least meet inflation targets at the very least here for the next few years, and I think honestly throughout. I think the world has changed dramatically over the last 5 and 10 years, that we're starting to see some movement, and it's about time for silver. So there you go. Now, again, there's a lot that could happen, and just like this kind of beat up silver eagle here has been around since for 20 years. One thing is for sure, the silver eagle still remains the same. It may be a little bit beat up, but it's still a silver eagle, and that is something to be proud of, something to have in your stack, wealth outside of the system, an insurance policy. There's nothing like that any other metal aside from gold can provide. But silver has the advantage because it can move like a commodity, which, as for most of the last 15 to 20 years, has been a disadvantage to silver's price. But I think that advantage is coming, especially after what I reported on fairly recently. So there you go. Let me know what your thoughts are about this video and about what UBS wants you to do with silver. In this comment, in the video, comment down below. Let me know what you think. If you are new here, well, I'd like to do news and analysis on silver daily and other precious metals as well. And so I hope you will consider subscribing to the channel and also pressing that notifications bell so that you can be apprised of the latest video that makes its way across your device. So with that being said, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.